Welcome to Markets Now. I'm Michelle Rook with Craig Turner of StoneX, and livestock futures a bit higher this morning. We are seeing lower wheat futures and the row crops. Well, they're trying to hold on to just some fractional gains here as we speak. So, Craig, let's talk about corn and soybeans. Really, the entire grain market has seen some really decent end user demand the last few days here. Weekly exports were very good this morning. Is this a value buy at this time? And do you continue to see end users coming at the market at this level?
Yeah, I do think it's a value buy. If you take a look at corn prices here at $4, to me, that means, if you add on 20% inflation, since 2019, 2018, that's 330 corn in my mind. We have a lot of corn and wheat and, already have a lot of wheat, but we also have a lot of corn and soybeans coming to the market. So if you're on the buy side here and you're looking at, where prices are and what are the odds of we're going lower versus what are the potential odds of us going higher and where the risk reward is, you're probably coming in here and buying. Also, the basis is usually weaker during harvest, so you get a little bit better on the cash price. Plus, we tend to make the lows of the year right now, and a lot of physical grain is not only coming to the market. The cash market is going to be looking to move it. So I just know, between like these export reports and also StoneX, a Fortune 500 company, we have corporate clients here also on the buy side, and they've shown a lot of interest. And quite honestly, anyone I talk to on that side of it, I'm like, hey, we should be buying here. I mean, when I take a look at corn, we could be a 4 to 5.25 market this year if we end up having stocks, around 1.5 to 2 billion. And right now, we're just going to be a shade under 2 billion. The old trading range for corn, which used to be 350 to 420, is probably a 4 to 520 market, 4 to 525 market here. If you're a believer, in that 20% inflation number, and I think a lot of economists and people on the buy side do. So I'm not surprised at all that they see $4 as a new value. That wasn't the case 5 years ago, but it certainly seems to be the case now.
Right. So you think we've carved out maybe a new trading range here, but we still look on sale. We look competitive. But I also have to ask you, with all the flash sales that we've seen this week, especially Mexico buying corn, is that are those clients concerned about possible tariffs, possible trade war coming up?
Yeah, they certainly could be, right? I mean, listen, I think in the past 7 to 10 days, the way some of these polls have gone, there's been quite a few people in the trade that think the Trump victory is more likely than it was, let's say, a month ago. And because of that, it has certain expectations or cautions you have to do. And one of them is trade, right? So if we all remember in 2018, we had the tariffs come down, and then then we had tariffs that came after the United States there. So I think people know that. I also think that regardless of what these tariffs or these new negotiations have, everyone's pretty well aware of how it may impact the market. So American soybeans, and I want to say national corn growers, they all have been able to go back and look at like what are the tariffs did and how did that hurt trade. And at least now there's a roadmap, right, of where we know prices can go. If we're going to lose 500 million bushels of demand uh, out of China, and we only make up 300 million bushels of soybeans demand elsewhere as South America and the United States kind of swipe clientele. Like you can now chart that. Back in 2018, no one had any idea what the trade war would do for demand. And when you get that kind of total uncertainty in the market, it's always going to be a sell first, ask questions later type market, just like we saw with whether we go back to the pigs crisis or we go back to the debt ceiling crisis. Like every time we had an issue, after that, the selling and never got as bad as it was after that first attempt. So I'm sure the funds have been a little bit shorter this past week because of that. I'm
Right.
also sure that a lot of the buyers out there are looking at this and be like, hey, we don't know what's going to happen with trade if Trump gets elected here. We not only do we have a value, but we might as well be buying also, just in case, because there is a you never know factor in all this.
Yeah. The other thing that happened again overnight is China throwing more stimulus money at their stock market. They've been trying to shore up their economy. They keep doing this, though. It's a repeat pattern. So, do we need to take from that right now that it's not working and this could have a negative impact on demand? Is that how the trade is seeing it right now?
Yeah, China's a real concern. So in the long term, well, I guess with the stimulus, it's very difficult to tell what's going on behind the curtain over there, right? They're not as we don't get as much transparency. So you kind of have to just read the tea leaves through their actions. And if they're doing this kind of stimulus, then things aren't going well. In their own economy and their recovery here. So and another thing which kind of makes matters worse is the population is starting to decline and it's aging. So it's not great for one, economic growth, and then two, the not only is the population starting to decline, but because of the aging population, protein demand is going to soften up here too. So I think there is some pretty big concern about China, just from like the ag demand. They are down year over year here on what they're looking for. Now, some might say they're waiting to see what happens with the election because if we remember when Trump was president last time, China used to kind of queue up their buys and then go into negotiations and make one big buy. And they did that routinely during the phase one negotiations. So there is that part of it. From a strategic part of view, that could happen. I think what the concern there is, and because they are having the economic issues they are, and they are having an aging and declining population, which started earlier this year. It's tough to tell which way they're going. But I wouldn't be surprised if they're also not buying a whole lot and kind of keeping their cards and their powder dry, just in case if they got to come back to the negotiating table later on this year in early 2025.
Yeah. Wheat is seeing some pressure here this morning, and that's kind of dragging corn and soybeans off of their highs. But do you sense that that's the market taking some weather premium out, or are the funds back selling? Is this technical?
Yeah, so I think there's definitely a little technical selling. I mean, there has been a range for wheat, and we've had a nice rally here. You also got the demand for wheat, for at least Russian wheat and some U.S. wheat has been stronger. We have seen spring wheat demand pick up and Chicago wheat demand pick up. We are getting rains in the southern plains. We are getting rains out in the Black Sea. That certainly is going to help, especially the drier areas. If not just right now, definitely over time. But I think, when you take a look at the wheat market in the short term, we're definitely getting some pressure here. Um, but in the longer term, when you take a look at the major exporters and the stocks that we have out there, right now, Russia is projected to eventually be under 10% stock to usage. Whenever Russia gets to under 10% stock to usage, that's when they start doing things like having export quotas, right? Or they'll start raising minimum suggested prices, which they've already done and here it's October. I mean, we just produced or harvested from, let's say, late May to now, all the winter and spring wheat that we're going to see out of the northern hemisphere for the next 8 months. And Russia's already trying to raise grain prices because it's going out too quickly, and they're seeing inflation in their own wheat and flour prices in Russia. So in my mind, I take a look at the rest of the world. No one has a whole lot of excess exportable wheat except for the United States. So as wheat comes up to about 250 per ton equivalent in Russia, and that's around $6 wheat here in the United States, and we're starting to get more and more competitive. You take a look at the basis for wheat; it's improving, especially for higher quality wheat, and up in the Dakotas. You take a look at the basis, even going on in Western Canada, which is spring wheat also, and that has been rallying actually pretty hard during harvest. So there is a story going on in the wheat market. In the short term, definitely technical selling. The weather got a little better. Those rains help, but it still has the best fundamental story in the medium to long term.
Yeah. Do you think the funds are going to push back short here? I mean, we obviously had a big rally as they covered shorts off their record short position, but now what do they do?
Yeah, so there's a market mechanics to trading, such large amounts of money in the fund world. And I'm sure a lot of the funds look at the same numbers I do, And if you say we're going to go back to adequate to burden some stocks, and you account for 20% inflation, your targets for corn to the downside would be 4, and for beans would be around 10, and for wheat would be around 550. And you can't buy back those huge shorts just on a whim. Like, you have to wait for the volume to come back into the market so you can buy it back, right? There's a supply and demand in actual futures contracts also. So during harvest is the time to buy all those contracts back. I'm not surprised the funds went from heavily short to almost flat, during the depths of harvest, because if you're going to do that, that's when you have to do it so you don't shock the market to the upside. And again, I'm talking about from the viewpoint of the funds and the managed money. Now that we know where we almost got neutral, and the neutral price for corn, or an adequate, is right around, let's call it like low to mid fours. For beans, let's call it, somewhere in the mid tens, and for wheat, it'd be right around 6. I think they're seeing the Trump, uh, basically what's going on there, and the trade issues, and also demand is kind of soft for soybeans. And when StoneX tracks the daily, they try to estimate if the funds added to or took away from positions. And, the last report I saw this morning is we are looking for the funds to add on maybe about 40 to 50,000 contracts of corn to the downside, about 30,000 contracts of soybeans to the downside. They were more neutral for the soy products and wheat, maybe a little bit shorter, a little shorter on wheat here, especially in Chicago. But we'll see. I mean, tracking the open interest isn't an exact science, but when the commitment of traders comes out later today, I wouldn't be shocked if corn was closer to 100,000 contracts short and soybeans were closer to 60,000 contracts short. But we'll see.
All right. Very interesting stuff. Thanks so much. Craig Turner with StoneX. That is Markets Now.